Hey, welcome out to the weekend review and playbook prep. This is where Peak Horizons Capital, we do some market analysis and we share some of our preparation for the week with our viewers. Let's take a look at the market gauges really quick. The short-term trend is currently bullish, but bounced back and forth a little bit here, and we are on a neutral, or rather probably uncertain market condition, with price dipping below the 20-day, then closing back up. It's been relatively bullish and favorable, although not a chance to really make much headway to the upside in their portfolios, as things have been really bouncing around. Beginning of August, end of July was a lot of chop, a lot of back and forth, and so maybe we just had 2 weeks where we got tricked to the upside, and now we're back into the chop. Looking at the intermediate trend, this is that chop that we were in. We got a little bit of a week or two chance to get out of it, and now might be entering back into it. The positive here is, if we look at the previous consolidation, price is still above that. So everything is normal. Everything looks okay from at least the index standpoint. The problem is jumping into the day-by-day action. It's very choppy. So we're just trying to hold on to our guns right now, trying to hold on to our positions, make it through some of the chop. We don't really want to get chopped off where we're going defensive, back to offense, back to defense, back to offense. So it's kind of more of a staying pattern if nothing is really wrong. Problem is, when you have increased volatility, the returns and the portfolio is going to bounce around a little bit more, but that's better than going completely defensive and seeing things rip up. You know, this is a setup for higher, although there's got to be a lot of caution involved because we can very easily go a lot lower. We have a one level here at the old high that could prove to be support if we dip below Thursday's candle. But if we crack that, we could very easily give back all these gains on this 2 to 3 day rip. Back down on the 50-day, that'd be another level. And then looking a little bit back at this previous support area, that could be another spot where we really don't want to hold on full offense and take that full drawdown. So we're pretty much at the max spot that we're probably willing to be to hold on to this level of offense. If we start breaking some of these levels, we're going to have no choice but to flip the defense. Just a very choppy time right now. This was hopeful that we were going to maybe get a trend. This was very, very constructive, a move out, and now what we do is we call this a breakout failure. So from failed moves usually comes fast moves down. From failed moves down come fast moves up. We've seen this a handful of times here recently. So we're just going to stick to our guns and play this as best we can with the offensive mentality, but also be very cautious and be ready to flip the defense if necessary. So here, looking at all the different indices of the broad market, we got the S&P 500, we have the MAG 7 specifically, the S&P 500 without the MAG 7, we have the QQQ, we have the NASDAQ, here's the mid caps, here's the small caps. So you can pretty much see this pullback is pretty uniform across the board. It's probably hit the NASDAQ 100 harder and the mid caps harder and the small caps harder than it's hit the S&P 500, as the S&P is messing around its 20-day. But you can see these fluttered down to the 20-day and 50-day. The mid caps sliced through the 20-day and hit the 50-day, but bounced up. And same with the small caps, crushing through the 20-day, finding support at the 50-day. So if some of this bleeds back in, we may be ready for the turn back up. Bitcoin on a complete tear since the bond and treasury announcements were made, the long-term buyback situation, and just ripping. I mean, something that I mean, somebody probably caught this, on that move up. This was tough to do with it so far below the 200-day. I would more be looking for a consolidation to move sideways before getting very interested. Here's the pullback in tech. Materials ripping. This would be gold and silver probably driving that. And here's gold. You can see gold driving higher. Healthcare still staying strong. A lot of biotechs have been strong. There was that news on Moderna coming up with a successful testing of a cancer vaccine, and Moderna ripped, I think, 150 or 200% or something in one day. So we'll have to see how that kind of plays out. That's real. That is on our list now to at least watch. If we have a chance, we'll take a look at that one later on. We have a model in-house that we call the exposure resistance model, and this is to try to help us really determine when we should be flooring it, pushing the gas in, flooring it, and when we need to be pumping the brakes. Right now, we're kind of more on a neutral rating, as even though the market's pulling back, it's not pulling back and completely falling apart. There's still pockets of strength. And so one of the main things that I look at in here is something called PMO, price momentum. This is a momentum in the market. And you can see if this is the S&P right here, us coming out of that area, and we had some momentum, but we've lost the momentum now. But gains in momentum can really drive, the market higher. And so we're going to look to see if this is going to turn back up and trigger a buy signal. Breadth, on the other hand, is still positive. We got one negative and two positives. The new highs, new lows are positives. Means we're having more stocks in the S&P 500 make new highs than are making new lows. In fact, if we look at the 21st, the net was 14. So 21 stocks making new highs, 7 stocks making new lows. This is a bullish type of environment. You have our advanced decline line is also in the positive. I know you can't see this, but this is looking at the number of advancers, number of decliners, plotting it cumulatively across what it did the day before and the day before and the day before, and then plotting it against this 10-day moving average. It's above that. So we're increasingly having more advancers. The one thing that's kind of beat up a little bit is the number of stocks that are above the 20-day, and that's indicative of a short-term pullback. So everything is looking, the way you would expect it for the given circumstances. And bull markets have pullbacks. Looking at some RS ratios, right here we're going to be looking at individuals, not individual, but sectors inside the market compared to the S&P 500. If we're green and above this orange signal line, then we're outpacing the market in that area. If it's below, it's underperforming, right? And so we're trying to position ourselves in the outperformers. And this is, when you have a streak like this, where you have a couple months, is really a great chance to be able to develop some alpha. When you have something that looks like this, where we're above, below, it's just a choppy area. So here's Bitcoin that we just looked at. You can see that shooting up after being a longer term underperformer. May, June, July, August, 4 or 5 months of complete underperformance, which looked really bad, and now a shot back up. We have materials that we looked at. Remember the gold, the silver. Energy looks like it might be looping down. We'll see how that is. This is too much dependent on geopolitical stuff, which could change with a tweet, or a text. Looking over here at some more defensive areas, healthcare, that's been outperforming after taking a little bit of break. Real estate, just a long-term kind of downtrend there. And there's the oil fund trying to pop back up. So not a whole lot of opportunity here in the things that have been normally working. And that could be that the leaders are taking a break again and the money's got to go someplace, so it's temporarily going here, or it could be a complete regime change. Most interesting here is probably this Bitcoin play, to see really how that pans out. Going to take a quick look at the themes. This is the themes from last week. You can see a lot of red in the artificial intelligence, cloud computing, semiconductors, cybersecurity, quantum computing, hardware space. Then you have the metals and the biotechs working this week. But if we go to maybe a 1 month time frame, you can see that very much switch, right? You got a lot of green in the AI, a lot of green, 10% plus, a lot of higher returns here for the last month. So if we go back to maybe 3 month performance, a lot more mixed. Let's go back to 6 month performance, and you can see where the dominance has really been over the course of 6 months. Some of these up 55%, 60%, 47%. You can see how much this area was returning. So the idea is this weakening? I'm not 100% sure that we're at a point where we're completely weakening in this space. It could be just resting. So playing that balance between offense and defense, or is it just rotation? This is kind of the area where you're sort of just waiting to see how things are going to pan out. And that's where we're at in our portfolios. We're waiting to see, is this a decisive change? Is this just a head fake? What exactly is the market about to do? As we come to a conclusion here, let's just take a look at a couple names. The first one up here is CrowdStrike. This is a larger holding in our ultra aggressive portfolio. Originally getting involved back in this area, took some little profits, added some back on the turn back up. And you can see that this thing really has traded very wildly. I would have liked to see some more constructive pullback where maybe it turns sideways in this area. But dipping below the 50-day, much like it did here, and noticing a very similar style possible shakeout. So it's be interesting to see. We're on the cusp of having to release this one with profits, right? Since our original purchase was here, but this one doesn't have to end. If it can just maybe go sideways and show similar action, and then turn back up and go to a newer high, the discomfort of the last 6 or 7 days will be all worth it. So we're trying to stick with this and give this one every benefit of the doubt. Let's go ahead and take a look at MU, one that we got into that we're positive on back in this area. It stretched above the 50-day, looking very good. We have this very negative price action. When you have this top wick after a run, this is usually a signal that in the short term we'll have a pullback. We had a 1-day pullback, even though it was kind of brutal and a big pullback. It's holding the 10-day and holding the 20-day MA. It tightened up, and now it might be turning back up to get back above the 50-day. Very, very constructive. We'll have to see what happened. A new kind of level of resistance that we need to see if this can get over is, I would probably say, right in this area right here. Maybe even a little bit lower to where we topped out, like this spot. If we can get up over this, this very, very good. Very, very good. Maybe it'll continue to build the right-hand side of this base, and then we'll probably see another pullback before going into new highs, if that's the journey that this one wants to take. A pullback, a place to maybe add, and then a rip higher. So we'll see if this one wants to finish basing and go on another run. It made sense for us to take a position in it. It's just going to be volatile. The ADR is 6.7%. It's going to move 6.7% on average every single day, is what this is, the average daily range for the past 20 days. So a volatile stock. So we're going to see volatility in the portfolio if we're holding volatile stocks. WDC, very similar. You can see the ADR of 7.6 on this, and looks very similar, except for not as good looking as MU, as this rejected the 50-day, but came back down, now turning. And if this can make a higher low, very, very positive action. So we're looking to see if this can hold this area right here, stay above that. Maybe it turns, maybe it dips down a little bit more, shake out, and then comes back up. But once again, holding on to this is going to be volatile. And we got originally entered this right around this area, and we added to it in this area right here. So we'll see how that one pans out. HPE, another former leader. So if you look at all of these, you'll notice that these have had big runs. Now they're consolidating those big runs. They're all turning back up, and that's why we've been in all these. So a big run, a consolidation, looking like it wanted to turn back up. A big run, a consolidation, looking like it wants to turn back up. A big run, a consolidation, looking like it wants to turn back up. HPE, a big run, a consolidation, and then we got into it. This is just a very massive sell-off, but we're still positive. So we want to give it the benefit of the doubt and see if it can kind of get some footing and turn back up. One thing we don't want to do is we don't want to be always in a situation where we toss it out and 2 days later we buy it back. So we want to try to give some of these growth leaders a benefit of the doubt when they're bought right. And you can see the RS, the relative strength is there. This is an RS leader. So if this is just one of those breaks, like right here, and then it's going to turn back up and lead again, we want to be in it. We want to be in it. Now, WDC, not the same kind of strength, right? But was huge, strong leader back here. So we're looking to see if that wants to regain. MU, huge leader, lagged, and now starting to become a leader again. We'll have to see how that pans out. CrowdStrike, a huge leader, a little bit of rest, maybe a little bit of rest. We'll have to see if it wants to regain that leadership. So just giving some of these benefit of doubt. One of the stocks that we're looking at that I really like what's going on right now is NVIDIA. Having that breakout of this area right here, rejecting, consolidating, testing again, rejecting, finally getting over, finding support, coming underneath, hitting resistance. So this is a very critical line, hitting resistance, finally getting back above on a gap up. We'll see if this wants to dip a little bit below the 20-day that we have here. And if it can find support in this area and start to turn back up and forms a little bit of a tighter action, meaning it trades within maybe the top of this range and the bottom of this range down here, turns back up, this might be something that we're really looking at possibly adding. Net, another one, area of resistance, crept over, possible now spot of support. Big candle here, probably would like to see this move sideways a little bit more and then continue its turn up. They don't ever do what I want them to do. So we just have to trade them based off what they do. Let's look at a couple more here. Hinge Health, very constructive look. A massive run. This is in the healthcare space. Coming back, finding support at 50-day. That would have been a great place to get into. Came back up, found resistance, now forming this sort of cup with handle. Nice handle. A move up out of here after finding support on 28 would be a spot that we'll look serious at. SpaceX, the opening IPO price, the huge rip up of 50-60%. The pullback found support, then kind of bounced and rolled well below, now finding resistance here. So if price wants to eventually turn back up and get into this area, that would be something to kind of look at. We're keeping an eye on it. So just to kind of review really quick, we're in a spot where conditions are neutral. Technically, the intermediate trend is bullish. Technically, the short-term trend is bullish, although it's dipping below the 20-day moving average. Came back above. We'll see if this is the area of support. I wouldn't be surprised if it does another retest and then possibly goes. I wouldn't be surprised if it breaks down. We have levels that we're looking at that we'll start playing defense on if things get too nasty out there. You are noticing Bitcoin being a leader right now. You got materials being a leader. There's gold, right? There's healthcare. So looking at these areas to see if something pops its head up, but just a very tough situation with money rotating around very quickly. We'll see if that wants to stabilize. If it does, we'll be playing offense. If it doesn't and it breaks down, we'll be playing defense. That's what I got for you on the weekend review. We'll be back at it on Monday. Take care. Have a wonderful weekend.